Namaste and very good evening, everyone. I see Dheeraj Sharma. Welcome you all on behalf of Committee on Management Accounting of ICAI in this very wonderfully designed virtual CP meeting on Management Accounting Insights, Key to Corporate Success. This VCM is being organized by Committee on Management Accounting and hosted by Jammu and Kashmir branch of NIRC of ICAI. It's really immense matter of immense pleasure for us that in this VCM we have with us none other than worthy and dynamic chairman of this committee, CA Charanjot Singh Nandaji, and also he is accompanied by very learned speakers of the day, CA Bharat Thakkar, Dr. PBS Jagat Mohan Rao, and CA B. Shekijar. Before we move ahead, I would like to invite Sri Vinay Jamwal, Chairman of Jammu and Kashmir branch of NIRC of ICI, for his welcome address and introduction of Chairman of Committee on Management Accounting, C.H. Charanjot Singh Nanda, sir. Over to you, Vinay, sir.
Thank you, sir. Thank you so much. Good evening, ladies and gentlemen. It is my pleasure to welcome all of you to today's very informative and knowledge-enriching webinar on Management Accounting Insights, Key to Corporate Success. I would like to extend special welcome to Central Council members, ICI, and Chairman Committee on Management Accounting, C.H. Charanjot Singh Nandaji, and Central Council member, ICI, and Vice Chairman Committee on Management Accounting, C.A. Nand Kishore Hegdeji. I would also like to welcome CA Bharat Thakkar, CFO Kotak Mahindra Prime Limited, who will share his thoughts and experience with us at a later point of time. Thank you so much. I express my gratitude and welcome our today's very eminent speakers, CA B. Shekizer and CA PBS Jagan Mohan Rao ji, who will share their vast experience on today's very interesting topic, that is Management Accounting Insights, Key to Corporate Success. I also want to welcome participants who took out their precious time to grace this webinar by their esteemed presence. Thank you so much. This main approach is basically to facilitate between the. Am I audible?
Yes, very much, very much.
Yes.
Sir, today's webinar's main objective is to facilitate communication and sharing of knowledge between the resource persons and the participants on management accounting, which will ultimately leads to achieve our institute's goal in corporate world. I take this opportunity to wish all of you a very good health and request to take care of yourself and your family members in this testing time of pandemic caused by COVID-19. Now, I will take the opportunity to introduce our very dynamic CA Charanjot Singh Nandaji, Chairman Committee on Management Accounting. First of all, I will admit that, sir, you have a very, very long profile that you have earned with your dedication and hard work that you have put in for our profession and the institute. Thank you so much. CA Charanjot Singh Nandaji at present is Central Council member for the term 2019-22 of the Institute of Chartered Accountants of India. He is chairman of Internal Audit Standards Board ICI, chairman of Committee on Management Accounting ICI, vice chairman of Continuing Professional Education Committee of ICI, member on board of the 26 committees of ICI, was vice chairman of Corporate Social Responsibility Committee of the Institute of Chartered Accountants of India, was vice chairman of Banking, Financial Services and Insurance Committee of the Institute of Chartered Accountants of India, nominated on the IRDS Steering Committee for implementation of risk-based capital regime. Sir was also the member of Quality Review Board set up by the Government of India, was member of the Central Council of the Institute of Chartered Accountants of India for the period from 2004 till 2016, in addition to the present member of the present council. Sir was the chairman of the Committee on Internal Audit of the Institute of Chartered Accountants of India and also the chairman of Committee for Members in Industry. He was the chairman of Women Members Empowerment Committee of the Institute of Chartered Accountants of India. Sir, you have a very long list that I think you are so familiar with all of us that I must stop here, otherwise I'll take another 15 minutes to cover it up. Thank you so much for giving me this opportunity to introduce such a elated person. And on behalf of the J&K branch of the Institute of Chartered Accountants of India and also the Committee on Management Accounting. I welcome all of you to this wonderful webinar organized by these wonderful people. And I think with this webinar, we will enrich our knowledge to the maximum extent possible. Thank you so much. Thank you, Ji.
Thank you, Vinay sir. Thanks a lot for a welcome address and such a nice introduction to leader of our profession, Nanda sir. And before Nanda sir start his chairman address, I would like to add 2-3 things about Nanda sir, as we have seen lot of wonderful efforts done by him as founder chairman of Internal Audit Standards Board of ICAI and in various other committees. So this year, when he took charge of Committee on Management Accounting also, we are able to see such a wonderful work like in the series of such a virtual CPE meetings with various branches of ICI on different topics related to management accounting. And sir, we are looking at you with a great hope, and we are very much sure that under your able leadership, under your able chairmanship of this committee, this committee will do wonderful work this year. Over to you, Nanda sir.
Thank you. Thank you, Dheeraj. Thanks for your kind words. Thank you, Jamal Sahab, for your kind words. I take this opportunity to thank Jammu and Kashmir branch for coming and being an integral part of today's seminar. I have three of my very revered guests, Mr. Thakkar, Mr. Jaganmohan Rao, and Mr. Sezigar. My committee secretary, Mr. Surinder Pal. Both the revered pillars who have made this program successful, Dheeraj and Jamal Sahab, and all participants who have come here to go home more enlightened. Ladies and gentlemen, we come back with yet another session on management accounting insights on key to corporate success. Let me tell you that management accounting is a profession that essentially involves, number one, partnering in management decision making, very, very important. The second is devising planning and performance management systems, again a very important facet of management accounting. And third is providing expertise and assisting the management in the formulation and implementation of the organization's strategy. Now, what is the role of management accountant within an organization? The key role of management accountants is to help the managers decide on the price of products by providing all the information regarding costs, market factors, profitability. Similarly, management accountants also help to determine the life cycle of current products and viability of new products also. They give us strategic thought process to critical business decisions and drive strong business performance. They understand how different parts of the business needs to come together. And therefore, management accounting is forward-looking accounting process, a process that puts the board, that puts the audit committee into action and ensures how things are put into the right perspective. Since management accounting combines accounting, finance, and management, it is a practical science which encompasses value creation within organizations. Management accounting is more concerned with taking decisions that affect the future of the organization and takes care how they can be taken into the new leap with a great proposition, great future ahead. Sir, what does management accounting do? They come in support of generic decision making. Yes, generic decision making at times is a big issue for managements, and it helps them to put them into the right esteem. Management accountants also are not only the guardians of the management's financial process, they are innovators who help devise methods to use financial tools to make the organization more stronger, more efficient, and more effective. It provides insights to them in decision concerning what to keep in house and what to outsource. And the most important facet is getting the balance right between the two and having the data to inform decisions in a great way to improve the process. 2-3 more things I would like to add. Management accounting helps in determining the risk, looking at the risk, mitigating the risk, and ensure that in case if it emerges in future, then also it can be mitigated. The second important aspect is to give a platform wherein the management decisions help the entire company to move ahead. Management accounting needs to align to the company as a whole. What do? They do reviewing products. Essentially, they review the existing products, do improvisation, and give the method for moving forward. Second, launching new products. Where do you find new products? How you need to launch them? Staffing such as Heringer train up current staff. They have to put a system wherein the hierarchy is totally taken care of. Coordinate accounting operations, very, very important. Then perform financial analysis, data analysis, financial analysis, so that the results are put on table. The inference from result helps the board drive its philosophy for expansion of the company. It is performance financial analysis. It is maintain budgets. It is build business strategy. And lastly, it is manage relationship with investors and auditors. A very important area. Mr. Thakkar would agree with me, being at the helm of affairs, Mr. Jangana also. I have seen people of his stature understand how to maintain the relationship with investors and auditors in interest of the corporation. In a nutshell, management accounting provides the management with better control of the business to achieve corporate success, which is the topic of today. Many companies are missing out at valuable insight and analysis by failing to take advantage of the management accounting skill set. Managerial accounting information provides vision to understand the strategy to be developed for achieving the objective and to stand in competitive environment. And that is why management accounting is considered a very important key to corporate success. We have great speakers ahead, not taking much on them. I want to say that chartered accountants have to excel well. I'm pained at times to see people try to criticize chartered accountants. I want to say that we are a class apart. We have always gone not only in the interest of clients, but the interest of the regulators, the government, and all people who come in line, the stakeholders. But still, to give boost to my profession, my chartered accountants, I will utter a couplet in their honor. The couplet says, तारीफ की चाहत तो नाकाम लोगों की फितरत है, तारीफ की चाहत तो नाकाम लोगों की फितरत है, काबिल लोगों के तो दुश्मन भी कायल होते हैं. I will give the English version. It says that people who are losers want praises. Otherwise, people who have the worth, their bitterest of enemies also respect them. Yes, we are a class apart, and chartered accountants have to perform their role as management accounting and help the corporate gain the greatest of success which is possible. So I want to thank all of you for being here. I want to thank the three very revered speakers, Mr. Thakkar, Mr. Jagan Mohan Rao, Mr. Sadigar, two of my very esteemed colleagues, Mr. Dheeraj, who has very kindly consented to take up and manage this entire show, CA Vinay Jambal, the Honorable Chairman of Jammu Kashmir branch, who very kindly consented to hold this. And let me tell you, we have close to 1900 members who are participating in this. So over to Mr. Dheeraj for further proceedings. Mr. Dheeraj, the dice is all yours now.
Thank you. Thanks a lot, sir. And indeed, I must say that in your such a very crispy chairman address, you have set a tone for the entire session. Rightly quoted by you that the management accounting is not only restricted to the accounting function. This is the combination of accounting, finance, and management. And it deals with the product development. It also deals with the product management. Also deals with the staffing, and everything you have covered in a very crispy way. So thanks a lot, sir, for such a wonderful address. Now we have with us CA Bharat Thakkar for his special address. So let me take the opportunity to introduce himself. But before I introduce himself, I would like to mention 2-3 things also about this particular program. Like these events are designed by Committee on Management Accounting to ensure that we chartered accountant who are part of the management accounting, they must get some insightful thoughts about the management accounting. Like we have the different kind of topics, and especially today our topic is all about the management accounting insights, the key to corporate success. So to understand what are the keys to corporate success, we have with us such a wonderful speakers. Let me introduce first speaker and the special guest for us, Bharat C. Thakkar. He is CFO of Kotak Mahindra Prime Limited. He has over 26 years of experience, including 9 years of experience with CFM, 7 years of experience with Global Investment Bank, and 7 years of experience with Kotak Group. His experience is spread across the statutory audits, internal audits, and finance. Currently, as a CFO of Kotak Mahindra Prime Limited, he is responsible for finance, accounts, MIS, compliance, and all the secretarial functions. As a head of the internal audit of Kotak Mahindra Bank, he has also taken such a wonderful initiatives under his tenure, and also he served the responsibility of internal audit of Morgan Stanley in India comprising of institutional equities, investment banking, primary dealer wealth management, asset management, private equity, and outsourcing activities in India. Management, he was in charge of managing the statutory audits at CFM, primarily for financial service clients like NBFCs, banks, insurance, mutual funds, stockbroking, etc. There are a lot of things to speak about CA Bharat sir, but I am summarizing by mentioning only this thing that he is always known for his specific awareness activities and developing the process and controls for insurance, mutual fund, and stockbroking. With these words, I invite Bharat sir for his special address. Over to you, Bharat sir.
Good evening, everyone. I'm audible, right?
Yes, sir.
Very much, sir. Very much.
Yeah. So, good evening, everyone. Thanks, Dheeraj ji, for the introduction and Nandaji to set the tone at the beginning of the thing. Just to, like I say, as Nandaji mentioned, management accounting. Basically, as a CA, like let's say, when we studied accounting and all that, we always studied the financial accounting where we keep on. The first thought when somebody talks of the CA is basically balance sheet, profit and loss, and then income tax returns and all that, and to an extent, statutory audit type of a thing. When we move forward to what has happened over a period of time, the organizations have started looking at what can we do better, just rather than looking at the balance sheet, profit and loss. And in fact, if you are an investor in the investor presentation calls, also there are a lot of specific information which are being sought by now the investors. So whether it is product wise, what is happening, which product is doing better for the company, what the focus is. So it is becoming more and more important for organizations to use management accounting for their success. So just Nandaji has briefly, I'll just touch upon briefly what does management accounting mean. We have looked at financial accounting. Basically, financial accounting talks of preparation of balance sheet and profit and loss account, cash flows, etc. This is also actually presentation of information only. However, this information assists management in, say, to begin with, say, day-to-day operations, planning of the planning activities, controlling activity, as well as decision making. It becomes this information becomes an input for, say, opening of a branch office or a factory at a specific location. This accounting helps. This information helps in that. It involves a lot of analytics. Involves a lot of data mining, if I use the right word. With the like all the organizations now have moved into, I would say they've moved into the ERP systems. The data is available in some form or the other. Whether we talk of location, whether we talk of product, whether we talk of jurisdictions, whether it's within India or outside India, whether like specific branch, all the information is available. One needs to identify the information and then analyze the information in specific form. To take an example, say there's a manufacturing company, say it is having if sales at a specific location and say production is the company has to decide where the production where should they produce, or if they have to decide to open up a new factory, they need to identify which location is better for them, whether close to the raw material, where the raw material supply is there, whether it's close to being it is better to be close to the where the sale like the ultimate sale is. So for example, if it's a perishable good, probably it will make sense to be closer to the point of sale. So basically, once you have this data as to what your sales are and you know what the customer focus is, you can probably decide to have decide the specific location. This is how it helps the management. It provides a lot of input on the strategy for the management. It allows management to even look at the performances of whether it's a location, or even for that it will further drill down to say performance of a specific employee or a group of employees. It could help in even risk management as such. Basically, once you have, like let's say, once you have some sort of data in a specific format, you can plan as to what has to be done. So for example, if you take again an example of say sales and you say it is a seasonal product, you can decide, and you based on the data available, historical data, you know that it takes n number of days for the material to reach the specific factory, and then you know from there it takes this much time to produce and deliver it to a specific location. You can decide based on the seasonality of the business, when should I really time the purchase, when should I time the production. Now, because it is all the systems are available in ERP, earlier people used to probably do some sort of calculation. The owners would probably do some sort of calculation based on their experience. Now that is basically supported by data. Actually, data becomes more important than experience is also there, obviously, but data becomes very important. Uh, if I just compare the difference between financial accounting and management accounting, if I just look at the financial accounting, the end user is primarily the owners. Owners would like to know how I've done what is the company doing, whether it is profitable, not profitable at the entity level. It will allow them to file returns, whether it's a listed or whether it's a company, then to file with MCA or with income tax for the income tax authorities. Whereas this end user is purely the management. Management, it will help the management to move in a specific direction. So whether it's a CEO or a MD or say specific location head, it will help this, and this is the end user. The nature of the records basically in the financial account is more purely historical records, whereas in case of management accounting, it is information is analyzed based on future to and then married with the future plans as to what the plans and decision making. Flexibility management of financial accounting is less flexible because it's a preset data points or the information has to be provided in a prefix format. Whereas in case of management accounting, because it is for the purpose of management can keep on deciding, like let's say what sort of information, what form they want, and then it can be done. Or even management accountants can really tell them, okay, this is the data point we can analyze in this manner. This is a better way to analyze the data, so it becomes more flexible. As I mentioned, it's more depends on the needs of management, whereas compliance in case of financial accounting purely driven by the income accounting standard, income tax laws, etc. Requirement for financial accounting is more to deal with the statutory obligations which we have, whereas management accounting is mentioned is for more for the management. It's a voluntary thing. Financial accounting, it probably more or less goes for the legal entity as a whole. So, for example, if you are having a bank, they will look at the financial accounting, will more look at the bank, all the branches put together. But when you look at a management accounting, they would look at a bank with a specific branch, whether it's profitable, whether it's not profitable. Even after that, management can come to a decision that no, we want to continue with the branch or location because of a strategic importance, whether it's that we want to be present this location. That could be the reason they can continue, but at least it provides information. Management financial accounting is for a defined period, say generally a 12-month period or a quarter. Management accounting can be done as per requirement. You want it weekly, you want it fortnightly, you want monthly, quarterly, whatever. You can decide the format and you can like say prepare. So for example, if you want somebody wants to look at a sales target, they can actually keep on monitoring the sales target based on data available on a daily basis, not even weekly or monthly as such. So this is the difference between financial accounting and management accounting. If I move to the next one, so I've been mentioning about the ERP or the software or the data available now. Normally, when I look at the financial accounting, your enormous data which is available in some form or the other in the financial records or systems or something, the debit credit which we normally refer to. And we would just normally refer to a debit credit and we'll go ahead with that when we look at the financial accounting. But when you go to management accounting, the same data, because it is available with say location, cost center, whatever is a various fields which you have, tax with the GST, which state GST, based on that, you can, so that's a primary source of the data, and there'll be some non-financial sources of data also. Both these data are used to come to a management accounting. So it just does not encompass financial accounting, is much more than financial accounting, if I use the right word. The biggest challenge in case of management accounting is Nandaji also mentioned about a lot of things as to what management accounting can do. But let us just understand that there is a voluminous data available in some form or the other. We need to be sure, and this is where management accountants' expertise comes in after basic discussion with the management as to what has to be done. Select the right form of information and then, like let's say, decide how we can use and analyze the data. So it's more, as I mentioned, it's data analytics in some form and keep on bringing and on table the relevant information which assist management in their decision making or planning as such. When I move to a performance management type of thing, so if you look at the management accounting, they can give you location wise. Say if you want to do location wise profitability, they can give that. You want to do product wise profitability, they can give you that. You want to do project wise analysis, You can provide if you are in a real estate type of company, or say you are a turnkey, you are running a turnkey project, then you could do project wise analysis as to what like let's say you can carry out that analysis. It can even help in something like a feasibility analysis. So you want to launch a product based on your experience of the customer profile, based on your experience of manufacturing or the product requirements, based on the geographies, you can actually do a feasibility analysis, come to a thing whether the product will be successful, or to make it successful, what all we need to additionally do, what all things we like let's say whether it's the target the customer base, we can decide that. It can provide inputs on cost variances. So you want to compare a specific, like let's say, so when we say cost variance, we generally tend to compare, say, something like operating cost or a travel cost or as a current quarter to previous quarter. Here you can probably, because the data is available, you can actually drill down. So if you look at the good ERP systems, you can actually drill down to say something like a travel expense as to whether the travel for the company is metros, whether travel for the companies is non-metros, whether there's people in specific jurisdiction or location who are traveling a lot, people at specific level are traveling a lot. You can come to you can do that sort of analysis, then decide make some if you believe that the cost is higher, you can actually decide that yes, the cost is higher, this is the way we can control the cost. If I look at, say, something like again a manufacturing company, we always again look at in financial accounting, we just look at cost of production, purchase, sales, and we come to the gross profit and the net profit and all that. But say when you're doing a manufacturing and there's a company which is into manufacturing, you know the standard requirement that it will need X value, X quantity of product A, Y quantity of product B. Once you have actual consumption, you can in management accounting, you can actually get the consumption details and find out whether either the product profile is changed, because of which the changes are being made, because you made some changes to the product mix, and because of which some material is increasing, the quantity of some material is increased, and the vice versa, or there is some actual wastage happening because of maybe some deficiency or some deficit in, say, the product, the manufacturing process, something in the machine which is consuming some specific product more. You can come to that conclusion, then move, decide what, like I said, whether take some corrective actions. Take an example of employee. Now let's say, for example, you are into a company which is having, say, sales. You have given a target to the sales people that they need to sell 100 units at a specific location. Say if it's a rural, then it could be 100 would be easy, or it would be a reasonable task. But say if you come to a metro, maybe 250 could be a reason. I'm just giving some numbers. Just 250 could be easier task. Now, whether it is fair, and whether, say, if you're in metro like Bombay and Delhi, whether 250 is okay or it could be different, again, depends on seasonality of the business. So you can definitely go down that route and, like I said, analyze the data in that form, because the information is available in some form or the other. If I look at another example, say, we always have been, like I said, some of you would be involved in, say, location-wise profitability, for example. Now, say you have a branch in Delhi and you have a branch in Bangalore, for example. Now, Delhi branch is owned by you, Bangalore branch is, say, on rent. Now, normally as a accounting, rent would come and hit you in the Bangalore profit and loss account. In Delhi, because it is owned by you, maybe either depreciation would there, or there'll be hardly any cost on rental type of a thing. Now, if you start comparing Delhi branch profitability, Bangalore branch profitability, we need to be careful whether it is okay or no, whether it's fair or no. Because probably Delhi branch is showing a higher profitability because there is no rental cost. So either you include some sort of rental cost because you're using your own premises. If you're not using your own premises and you had to get the premises and rent, what will it cost? And after that, decide whether it's profitable or no. Because if you look at the management can decide that yes, if I get Delhi branch also on rent, the premises which are owned, I could probably sell it and deploy capital into deploy the money which we have received into some other sources as such, where you could earn income. So basically, when you're looking at a location, you need to be careful about, say, this rent. I mentioned about raw material. Then the other thing is, it could be, like I say, you can decide whether it's make versus buy or outsource. Now again, a lot of global organizations have been outsourcing work to India. Whereas in India also, like I say, if it's feasible and to an extent because of the pandemic, now we are seeing that a lot of the people are working from home. So the question really comes up is, could you, let's say, for example, outsource this work to a company, say, which is based in a tier two or tier three type of cities, which could give a good push from an economy to the tier two, tier three type of cities. Whereas from the company's perspective, they could probably end up saving cost because there's obviously differential in certain, like let's say, cost. Say, for example, rent in tier two, tier three cities is lower. So if you're able to get the talent, like let's say, you're able to do that, then it makes sense for organizations to look at in that manner now. Especially the pandemic has really thrown that open because we are seeing that a lot of people are now working from home. So that you can do some sort of analysis on that lines. Take an example of this. I mentioned about employee productivity earlier. It can help in budgeting. Say, for example, when you're preparing the budget for the future years, you can decide what will be your focus area. You can decide what will be focus markets, and then basis that more come to rather than just doing a simple 20% growth or 10% growth I want over the period over the next year in the next year. Rather than you could do further detailed analysis that how I'm going to get the 20%. Probably say 10% could be from the same markets, and then another additional 10% I'll go into new markets. Now, which markets to identify? Which new markets to identify? So it will help. So, for example, if you are in a business of say, a simple thing like woolen clothes, probably the market will be good in say North India, but not that much in South India as such. So you can once you have this data, you can keep on analyzing the data. And again, when we say South India, okay, it will not be in metros, but if you go to some hill station again, that could help. So it helps you in deciding and analyzing as to what we can do. It helps companies to do a sales forecasting of like sales forecasting also. Nandaji, I think so mentioned earlier, when you're if you're coming into a new product, if you're launching a new product, you can, this analysis based on your past experience can help you in costing of the new product. If not 100% accurate, maybe close to 100% accurate, you can come to the costing. It can help you in business driver matrices. You can even in number of organizations we like as if you take now IT companies, they are really dependent. Like as if you see newspaper article, they would say that they have got business from this specific clientele. So IT companies, banking and finance clientele has given them a really huge chunk of revenue, or say a specific client has given you a good source of revenue. When there are new projects which come in for the same client within the same field, say banking field, they can do further analysis and say whether it is profitable, whether it's, we may say that, say for example, I'm just naming some XYZ tier top IT company is getting revenues from this global bank, say for example. But whether it's really profitable for them, it might give you billions of dollars of revenue. But whether it's really profitable for them, and at some stage, is it just top line which helps, or is it bottom line also which is required? So this analysis will help you in say something client profitability analysis as well. So given all this, it's enormous data. There's a lot of data mining which you need to do. So once you have that data and what management accountants' importance is to identify what data is required, what data is useful, provide the management with meaningful what do you say analysis, so management can decide as to what is good and how they can take it forward. So thanks for this. Any questions? I'm free to. Thanks Dheeraj ji and Nandaji for this.
Thank you, Bharat, for a very scintillating presentation. Really an eye opener for all the participants and us also. Thank you so much.
Thank you, sir. Thanks a lot. And I must say that in your this very brief presentation, brief deliberation, you have covered about the feasibility analysis, product analysis, and importance of data in the management accounting. With the examples of like sale of the woolen products in northern India and southern India, also with the help of the example of the opportunity cost of the rent of on premises, in a very easy manner, you have explained that how the management accounting is different from the financial accounting, and also you explained that how the management accounting is not only dealing with the financial information but also dealing with the all other relevant information in the data. It was really wonderful deliberation, sir. And if we have some questions in the chat box, then we will put the questions before you later after the presentation of two other eminent speakers, sir.
Sure.
Thank you so much, sir, for your time and very insightful deliberation on this important topic. Moving ahead, we have with us a very eminent and distinguished speaker, none other than Dr. PVS Jagan Mohan Rao. He has done MCOM, LLB, fellow member of Institute of Company Secretaries of India. Also, is fellow member of Cost and Management Accountants Institute of India. He has done MA in Astrology, MA in Sanskrit. Also, he has done Master of Communication and Journalism, and he has done PhD. The wonderful blend of sir various kind of qualifications and degrees, and he has served as the president of South Asian Federation of Accountants, a very distinguished position for any Indian professional to have. He served as president of the Institute of Company Secretaries of India. Also, he is the former council member of Institute of Cost Accountants of India, former member of PAIB committee of IFAC. He held the positions as Director Finance, CFO, Company Secretary, and Independent Director, Chairman of Audit Committees, and many other distinguished positions in various corporates. Besides these, Jagan Mohan Rao sir has published various articles in the journals issued by ICAI, ICSI, ICMI, and various distinguished newspapers like Financial Express, Indian Express, the Deccan Chronicle. Also, he has addressed at local, regional, national, and international events. A very mixed blend of different qualifications and a diversified experience. I request Jagan Mohan Rao sir kindly start your deliberation and guide us with your wonderful address. Over to you, Jagan Mohan sir, please. Sir, unmute yourself, please.
Yes, sir. Good evening to you all. It gives me great pleasure to say a few words on the subject, and I am extremely happy to see our very highly distinguished chartered accountant friend of mine, CA Charanjit Singh Nandaji, and CA Vinay Janwal, chairman of the Jammu and Kashmir branch of the CA Institute, and CA Bharat C. Thakurji, who has explained very nicely about the management accounting and its role for the development and prospects of a corporate body, who is the CFO of Kotak Mahindra Prime Limited, and my very distinguished friend, chartered accountant friend from Hyderabad, CA B. Shekizar, and CA Nandakishore Hegde, CCM, I think he may be joining, CA Nakul Shroff, and CA Dheeraj Sharma and Dr. Surinder Pal. It gives me great pleasure again to share some of my thoughts or ignorance on this subject. And Mr. Nanda has very nicely set the tone, as Dheeraj has mentioned in the beginning. Very nicely has said, he has covered very important points. He has given the full canvas of the contours of the discussion and on the management accounting and its role for the development of corporate bodies. And Sri Bharat C. Thakurji, he has given with his vast experience the inputs into how a management accounting technique or management accounting as such will be useful to the corporate bodies, including the planning, budgeting, and marketing, so on and so forth. And let me see what is that I can share from my thoughts. At the outset, I am grateful to the Institute of Chartered Accountants of India and the Management Accounting Committee for giving me this opportunity, and definitely to our chairman, Nandaji. And I will get into the subject and let me see. If I can bring the presentation here, is all right. Otherwise, I will explain.
Sir, you can bring the presentation, sir. You have to just...
I'm trying, but I don't know whether it will not getting.
Good evening, sir. Sir, I will run the presentation from my end.
Achha, can you put the presentation, Dr. Pal?
Gyan,
Sir, we are
Gyan
putting the
also.
presentation.
Yes, sir, I
We are
will
putting
join.
the presentation, Mr. Gyan. We are putting the presentation, sir.
Yes, yes. So anyway, to start with, that whenever you think in terms of management accounting, what is happening? See that as our learned speakers have explained, yes, it is playing an exceedingly great role. And to start with, management accounting looks at something differently than what financial accounting looks at. Financial accounting is essential for the success of management accounting in any case, and that is the base, but it projects a lot and goes into the future, and whereas the financial accounting normally deals with the historic kind of a thing, the past things. So according to the American Accounting Association, management accounting is the application of appropriate techniques and concepts in processing historical and projected economic data of an entity to assist management in establishing plans for reasonable economic objectives and in the making of rational decisions which with a view towards these objectives. See that our learned CFO CA Bharat Thakurji has mentioned, whatever he has mentioned, all these things are contained in this particular definition. So this is the definition, but he has mentioned in a practical sense what are all those things. And Nandaji also has mentioned many of that we can take from this by the American Accounting Association. So now whenever you think in terms of that appropriate techniques and concepts, what are the appropriate techniques? Think in terms of budgetary control, that ratio analysis, and then projecting kind of things using the statistical techniques, statistical tools to know about the current scenario, the expected market penetration, and then whether make or buy, what are the tax implications when you select a particular choice. All these things are that concerning all these things we discuss in the management accounting. Okay, next slide. Yeah, management accounting meaning it comprises of two words, management and accounting. Accounts which increase managerial efficiency are providing all those information and facts which are necessary for managers. Definitions. According to Cost and Management Accounting, London, Cost and Management Accountants, London, management accounting is concerned with the presentation of professional knowledge and abilities to reveal accounting information which may help to the management in policy formulation, planning, and control for the undertaking. See, whenever you think in terms of a particular set of information, that what we have our the Companies Act, Schedule 3 or Chapter 9 or Chapter 10, so on and so forth. If you think in terms of that financial accounting, that gives information. As an accountant in the organization, we prepare the statements in the sense profit and loss account for a particular year, and then balance sheet, the state of affairs on a particular date, maybe 31st March, December, or so on and so forth. So these kinds of information that gives the result and historically what has happened. But that may not be sufficient for the purpose of taking decisions and implementing policies and formulating the policies in the boardrooms. So for that purpose, the information that is given and also the future projected information that is taken, and then it is slowly that taken into the formats that are useful and then essential and then required in a particular shape. Maybe think in terms of financial statements, the analyzing financial statements, and think in terms of the funds flow analysis, cash flow analysis, and then you got that budgets, various budgets, and not only budgets. You see, formulating the budgets is one part of that, and then controlling, and then setting the standards, setting the yardsticks. This is the important setting. Then after the actual results are out, take the actual results and compare with the standards set, and then find out the reasons for deviations, if any, and then deviations, whether they are positive or not so positive, and then what are all the remedial measures that may be required to set things right, so that you can you can ultimately achieve as per your plans and targets and objectives of the corporate bodies. So again, for this purpose, that in this definition, if you pick up some points, so then whenever you think in terms of, in the context of management accounting, in the financial accounting, we take the historic records, and then whatever expenditure incurred, whatever the income has come, what the cash in, cash out, so forth. But in the case of management accounting, very important aspect is it questions why this expenditure, why not more expenditure, or why not lesser expenditure, and what are all the benefits that we have got for incurring a particular expenditure. So these kinds of questions that are put in the management accounting, which are not there in the financial accounting. So now you see, whenever you think in terms of management accounting, another important aspect is reporting and MIS, Management Information Systems, the one that we call as MIS. MIS, that it gives maybe, every Monday when I was during my, that when I was 25, 26 years of age, I was associated with a company. There I was given the responsibility of giving MIS statement every day. Every Monday. Every Monday I had to give that statement that used to go to the committee, a particular committee that reports to the board of directors. So this information, this is based on the stock taking. We used to take physically the stock taking, and then various levels of the stock that we read in the management accounting and cost accounting, that we read various levels of the stock, slow moving, fast moving, break-even analysis. These kinds of stuck up in the slow moving items, and then what is the economic order quantity, what is the time that is required, and what is the safety period. All these, whenever you think in terms of these things, what comes to our mind is marginal costing. So marginal costing is very, very important, and then that is dealt in the management accounting. Then you think in terms of that. And another important thing that you may be able to pick up from this definition is, you can get into the next slide. Next slide, please. Financial accounting and management accounting for corporate success. See, this is the subject that we have chosen. Selection of relevant concepts of management accounting. See, there are many concepts which are available as to the management accounting is concerned. But you see, whenever you think in terms of so many concepts, normally what do we feel? These many concepts are available, and it should not remain at a theoretical level. We have to pick up one. Say, for example, only budgetary control, or only that funds flow analysis. One particular statement, one particular activity of the management accounting, you can do wonders, and all other things will remain as effective as they are supposed to be. At the same time, giving focus on a particular concept, which is very important at a particular point of time for that particular point of the organization. So selection of relevant concepts of management accounting is very important. Application of appropriate techniques to the concept, information available from historical and financial accounting and other sources to make suitable adaptations and future projections. You need to be very well acquainted with making adaptations of the information that is available in the financial statement. That is one of the very challenging aspects of the management accounting. Then only it will add to the prospects of the organization. Then providing inputs in the usable formats to the corporate boards for analysis and making policies and making decisions and to establish achievable corporate objectives. See, I'll tell you, that I had an experience of attending a board meeting when Dr. Anjireddy, he was the chairman of the Dr. Reddy Labs, and in a particular board meeting, he used to fix at 12:30 board meeting. Board meeting will go up to 1:30. It means 1 hour. 1 hour is the board meeting, and periodically, maybe once in a month or 2 months, a board meetings takes place. The kind of leadership that used to depict in these board meetings, tremendous. For that purpose, what do we need? Information. Information we need, that is MIS. The information that we need, which is useful, which is understandable for the board of directors at that level, because they don't have much time. They have very less time. If you want to make boards function effectively, it is the role of management accounting which goes a long way. So management accountant, as a management accountant, as a CFO, you need to ensure that information is available to the board of directors in the boardrooms, the information that is exactly, see that oftentimes when I was there in the boardrooms, oftentimes we think that people will not be able to understand unless you give details, unless you give lengthy of the agenda papers, this much of bunch of agenda papers. Oftentimes it is not necessary. We only think that it is essential, giving that much of information, that much of papers, but directors can understand much better than oftentimes than we think that they can understand. So for that purpose, what do we need is we have to develop a kind of MIS wherein you give the information what is required and what is required for the purpose of discussion and taking decisions, or that devising the policies. This is one of the very challenging role in the management accounting. If you are successful and have that kind of MIS, it will lead to an exceedingly great kind of success. I will also like to quote one section here, Companies Act, section 134, yes, code report, section 134 Companies Act. If you think in terms of subsection 5, and then you have clause E and clause F, these two particular clauses, if you think, huge amount of information that is required for the purpose of the boards to take a call on that, and for the companies to have complete prosperous kind of a future. Because this speaks about the internal financial control systems and also the legislation compliance. So MIS is one of the very important thing. If you don't comply with many things, that costs you. Anything that costs you is part of the management accounting and cost accounting, and of course accounting, and then it leads to, we need to lay emphasis on that. So my point is that section 134 subsection 5 clause E and clause F, these details which are required to be given, management accountants play exceedingly vital role here. I'm not going into details of those provisions. And whenever you think in terms of corporate objectives, management accounting plays a very important role. And whenever you think in terms of, as our CFO of our Mahindra company, and then our Nandaji also, they were mentioning the objectives. What are all the objectives, corporate objectives? If you want to fulfill the objectives of the company, and then what do you need to provide the information to the, and see again, whenever you think in terms of management accounting, oftentimes we think that this information, management accounting information, we will give it to the top management, board of directors, that CFO, or so on and so forth. It is not so. This information must be available to everybody, maybe from the manager level, that DGM, AGM, the general manager, vice president, so on and so forth. Everybody must be having this information, and everybody must know what is that the company's objectives are, what are the objectives of the company, and then only they will be able to contribute to the success of management account. Next. Management accounting in future oriented. Anyway, we have noted that management accounting is future oriented. It looks into the future and tries to cover some of the uncertainties. We live in the corporate body, business, entrepreneurship means all these. Each word means we are living in an uncertain kind of an atmosphere, and to mitigate some kind of uncertainties and problems, we need to look into the future. There, the management accounting plays a role. Help set standards and serves as yardstick, analyzes and interprets the data. This is another important thing of management account. Whenever you think in terms of data, you need to analyze. It is just data is not sufficient. Converting into information is not sufficient, but it must be converted into a shape that is understandable to the people who go through this information. Next. Devise the MIS, constantly monitor to make additions to this. See that devising MIS, I think management accountants and management accounting department can do very well in the context of devising MIS, management information system. And then whenever you devise a management, oftentimes in some of the companies I have seen that they devise a good MIS and then that is implemented, followed for a very long time. It doesn't serve the purpose. It serves the purpose only whenever you have a MIS, and that MIS is effective MIS, and then that suits to the changing times, that things are changing, competition is changing, and then that alternatives are changing. Today we have COVID, so MIS must be in line with the times, and then it is a dynamic thing. It is not a static thing, static kind of a thing that you have a schedule for writing the that you have a schedule to present. It is not like that. We have a schedule, you have a scheduled format to file with the register of companies. It is not like that. MIS is a very dynamic thing, and management accounting department has exceedingly great role to have an effective MIS, ensuring accurate and quality input. This is another important. See, whenever you think in terms of thing, we have placed that kind of importance to management accounting department. Imagine your information, whatever information, because you don't have any supporting documents, you don't have any that calculations given into the boardrooms. You give the final results in terms of ratios, in terms of budgets or whatever. When people are dealing with that, you can imagine the quality of that information, at what level it should be, and also at what level of accuracy the information must be there. This is the role of management accountants, and whoever plays that role in the organization, by whatever name called, whether you call management accountant, finance manager, or CFO, or vice president, or director of finance, whenever you have a role to play in the as far as the management accounting the issues are concerned, you must be very clear that you provide your statements, information formats provide accurate and quality inputs. Then only the decisions can be accurate and qualitative, providing in the way the users need it. Again, is this way I have already mentioned that, but in any case, you need to give the information that the people can understand. See, in boardrooms, and those people who have attended the boardrooms, you will have experience of that. You will come across various types of people in the boardrooms with varied backgrounds. A very civil servant, chief secretary, former chief secretary of state, a state maybe senior civil servant, maybe a board member, a former that bank chairman, retired chairman of a bank, maybe a member, a chartered accountant, a company secretary, a cost accountant, an engineer, and sometimes completely illiterate also, maybe a member in the boardroom. So imagine in that kind of scenario, as a management accountant from your department, what kind of information you will produce. And this is not one person, combination of all these people. So sometimes that it is essential for us, the professionals, to educate the boardroom people, the directors. You need to educate. This is also, in my view, a part of the management accounting department, to see that whatever information you give it to the boards, people understand that information. If they are unable to understand that information, the purpose of you giving the information, it doesn't serve any purpose. Is it clear? So the information must be very clear, and the information must be provided in the way that users can understand that. You see, a thumb impression person can be a director, and as all of us are aware, a board of directors, in a board, there may be all the directors' thumb impression. There is nothing. There is no, nothing that stops you from becoming a director of a company when you are a thumb impression. Then what kind of information from your management accounting department shall go into that particular board? They may be all the directors completely thumb impression. Is it possible for all the directors to be thumb impression? Yes, it is possible. Only when you have listed, when your company is listed, and then the guidelines are applicable, and then you have an audit committee chairman. Even then, formal qualifications are not prescribed there. So, the thumb impression does not mean that I can't understand the financial statements and, the financial information. So the point is that, the point that I'm trying to drive ourselves in this particular context is, it is a challenge for people who provide MIS and information on the management accounting issues. It is a challenge to provide in a concise way, in a very, very conceptual way, very small way, not big documents, small way. And they must contain all the, it's like a capsule. You take a vitamin capsule, it gives you all the vitamins together, multivitamin capsule like. So your information, your statement, MIS must be of that quality. Then only the purpose of management accounting and department's objective will be fulfilled. Then only that kind of things will add to the prospects of the corporate bodies. Next. Yes. Management accounting and sustainability. This is a very, very important thing. This is I think our friends will agree with me. This is most talked about topic in the whole world today among the accounting professionals. And I had an opportunity to present a paper on this in the PAIB committee, Professional Accountants and Business Committee of IFAC, International Federation of Accountants, in 2019 in New York. And then, whenever you think in terms of sustainability accounting, it is altogether a different kind of a thing today. Today, every company will have to think in terms of the sustainability. Sustainability accounting, sustainability auditing, sustainability ISER. You see, there is a international standards on accounting and reporting, ISER. It is conducted by the United Nations organization, UNCTAD. United Nations organization UNCTAD conduct this program every year in September and October in Geneva. And in one of the seminars I was present, and that time Mr. Adukia, Ms. Rajkumar Adukia from CA Institute Central Council member, and Mr. Shekhar, I think he is a council member now. Both our chartered accountant friends, I was there, and some other people, we were there in that particular seminar. And that there you can understand what is the role of management accountants, in particular ISER kind of issues that are discussed internationally. So the sustainability accounting, whenever you think in terms of that, maybe I don't know if some of you have come across, there was a paper, there was a discussion paper issued by the International Federation of Accountants. It was December 2020 was the last date to give the inputs on the sustainability standards. So now the whole world, the accounting profession, see that as you are aware, IFAC is an organization where you have 100 and, if I am correct, more than 150 accounting institutes are members there. It is for more than 135 countries across the continents, across the countries, across the professions, even CMA, CA, all these professional bodies, they are there members. Various other members are also there. In that it is discussed, and then in that paper, if you have any time, if you have at any time any opportunity for you to read that particular discussion paper, that is on the accounting standards, a discussion paper on the accounting standards brought in by the International Federation of Accountants in December. If you go to the IFAC site, you will get that. You will understand what is the role of management accountants as far as the sustainability is concerned. And you are aware, United Nations the United Nations sustainability development goals, SDGs, sustainability development goals, they have 17 SDGs. To ultimately address at UN level, what is the role of a professional accountant? That is the question here. And then whenever you think in terms of professional accountant, a chartered accountant, a cost accountant, all are, we are all giving the information as to the management accounting department is concerned. So what is our role? You will understand better when you read that particular paper. I don't have much time to discuss about that paper, but it is a beautiful paper, and we have a role to play in that. So sustainability accounting and sustainability standards are the most talked about subject, as I told you, in the international context today. Then there may be a separate, sustainability standards. Even our CA Institute, there is, I think, there is a separate committee on the sustainability standards, and then bringing out so many information and material. And management accounting aspect deals with the issues that are referred to in the sustainability. There are many issues. Some of the things I have noted here. Alternate fuels, reduction and spare usage of fossil fuels. It's a beautiful thing. Alternate fuels, reduction and spare usage of fossil fuels, corporate social responsibility, and then the nature, the CSR, the reforestation and related benefits analysis. And then I see that these kinds of information which is required for board of directors to take a decision is given by the management accounting department and management accountants. So the point is that, today, if you want to, even if you think in terms of foreign investors, private equity investors, FIIs, and then, venture capitalists, all those people are looking towards the sustainability standards of the organization. So if you are complying with some of the things, naturally they are tempted to lend you or provide you in terms of equity, capital, or so on and so forth. Then I have there noted. If I can lay my hand, I will tell you. Okay, I will tell you at the time of. Then management accounting aspects deal with the issues that are referred to in the sustainability accounting. And a very important thing that we have to think in terms of the sustainability accounting and the role of the management accountings today is climate change and sustainability accounting and standards. And whenever you think in terms of climate change, the global warming, all these kinds of things, what is the cost? What is the cost to the environment? And if you remember, on 5th of June 2020, 5/6/2020, there was a national webinar conducted by the Institute of Chartered Accountants of India. Incidentally, I was also a speaker there in that. And Sri Suresh, our distinguished honorable member of parliament, Suresh Prabhuji, CA Suresh Prabhuji was present there as chief guest. He was mentioning in that particular thing, which is very relevant for the management accountant's role, that he was mentioning what is the cost to the environment. What is the cost to the environment? Is it not the duty of professional accountants to think in terms of? If I remember correct, he was mentioning, yes, we have a role and we need to develop a kind of system to measure cost to the environment. This is very important. Today, whatever, that whether it is a pandemic or, natural calamities all over the world, major, that forest firing, whatever it is, we are seeing unnatural things because we have encroached into the environment, and then we are facing things back to us because we have not cared for that. This is what, if I remember, Sri Suresh Prabhuji's point, cost to the environment. If every organization, every company thinks in terms of cost to the organization, measures some kind of a thing and brings its impacts on the society, on the nature, and what is our role to play? Because management accounting looks at a very wider picture. It is not a very small picture. It is a very, very wholesome picture. So if you want to address the wholesome picture as the management accounting department, we have a role to play, and this information must be provided to the boards, part of your MAS. So this is about the thinking. Whenever you think in terms of sustainability part of it, I have some more things mentioned, but I think I will have to conclude. So I will stop at on this point, and then I'll get on to the next slide. 2-3 important points I want to mention. Yes, triple bottom line. This is very, very important thing. I think this is again most talked about topic since a little longer time it is being talked about. And if you think in terms of triple bottom line approach, who has got role to play? It is the management accounting department. And if you think in terms of triple bottom, this concept, and as an organization, you have got exceedingly great benefits if you comply with these kinds of things, not only in current scenario, but in the long run. In the long run, for a company, a few departments in the company and organizations in the company. See, I think that in our country, we have about 14 lakh companies, incorporated companies, 14 lakh companies or something like that. Some companies have been stuck up recently because directors' compliances have not been there. Balance sheets have not been filed. Maybe the 12 lakhs to 14 lakhs or somewhere around the companies are there. And what is their contribution? Are they thinking in terms of triple bottom line? This is a very, very pertinent question for every management accountant and every management accountant department. Every time we talk about the role of management accounting for the prospects of any corporate body. And whenever you think in what is triple bottom line, I will take few minutes and then conclude on this point. Triple bottom line speaks basically about profits, people, and planet. As a management accountant, you need to keep in mind not just profits. Profits are very, very important. But at the same time, you need to think in terms of people, that is social, society, and then planet, the nature, sustainability, all these kinds included there. Who has brought in actually triple bottom line? TBL was actually brought in by a businessman and a writer, L. Kingston. L. Kington. L. Kington is a person who has actually brought this in 1994. And later it was incorporated in the oil major Shell company. In that company's annual report, it was included in the sustainability report of 1997. Shell company's sustainability report in 1997 annual report, they have incorporated that. Where did it come? If you want to, it is only a matter of time. Every company will have to do that. The CPE is coming with the rules. That Companies Act, we have certain rules, and international organizations they are bringing. It is discussed in IFAC, SAFA, CAPA, everywhere. So triple bottom line is very, very important. And I will see that if I have one more point on this. Then you see, profits are measurable quantitatively. You see that always we think in terms of, then what you see, whenever you think in terms of profit, people and planet, triple bottom line, if you think in terms of that, what is the role of management account? Management accountant role here is profits. It is not a big picture in the sense that it comes in the routine. As the accounts have been, transactions have been recorded and results have been found out. You get your profit and loss account, and then what is the profit? That part of it is over out of 3. Then people, how do you actually ensure that company has played responsibly towards the society? If you understand that your role as a management accountant, you will enjoy in the company for the benefit of entire broader picture of the management account, the planet. And again, whenever you think in terms of planet, who is responsible? Environmentally responsible. Corporates are definitely responsible, but to what extent you are responsible? How do you come out of that responsibility? And I know that it is necessary to exploit the nature. You need the fossil fuels. You need to deforestation. Choppy, but I feel that there is a huge role for the management accountants to think in terms of from the angle of this profit, people and planet, that is triple bottom line. And whenever you think in terms of that, what I'm trying to conclude on this point is, profit is quantifiable, measurable. But as far as people, that concept, that point of people and that point of planet, these two things cannot be measurable. It is a qualitative kind of a thing. So you have a lot of role to play to have ultimate benefit from this particular point. So triple bottom line is not respected, then what happens? Triple bottom line is not respected, what happens? Destruction, rainforest gone, exploitation of labor, damage to climate, global warming, and all these matters. I think that that we will stop at this, thinking about this particular point. But in any case, you need to have the information as a management accountant, give it to the board with transparency, available data, all the 3 points. And then there is one company, Action Structural Innovations LLC, limited liability company, is in Ohio State, United States. So they have come out with a commitment to sustainability, and they build roads, railroads, they ties, and then fillings and usages. They use only recycled plastic. They use recycled plastic bottles and industrial waste, and avoid using wood, avoid using steel, avoid using cement. Can you imagine, as a management accountant, if you are able to provide this kind of alternatives to your board of directors, that you can use recycled plastic instead of using cement, instead of using wood? How beautiful it will be. See the role of management accountant. Is that this time is not sufficient for discussing in detail about these matters, but these play a very, very important role. And yesterday I was going through the internet. I have found one more important, that example. You can take Ben and Jerry's. Ben and Jerry's is the ice cream company, as stated in the website. So Ben Jerry's is founded on dedicating sustainable corporate concept lined in prosperity. See that one of the main objects is to run the company on the lines of sustainability. and later on this has become this Ben and Jerry's company, the ice cream company, has become the fully owned, that wholly owned subsidiary company of Unilever. Unilever, International Unilever PLC company. That is Unilever, that Dutch and British and Dutch company that is. So this is all one of very important things. Whenever I say this, I am reminded of one beautiful quote by Lord Krishna in Bhagavad Gita. Yachapi sarvabhutanam bijam tadaham arjuna nad adasti vinayasyat maya sat characharam maya bhutam characharam. He says yachapi sarvabhutanam bijam tadaham arjuna nad adasti vinayasyat yada maya bhutam characharam. He says that maya bhutam characharam na tadasti vinayasyat. It means everywhere I am there. In the tree I am there, in the fossil fuels I am there, everywhere I am there. So the point is that if you remember that divine kinds of things, you don't exploit. But I think that these are all very important things for a management accountant. You will enjoy doing your job when you are a management accountant. I have some experience. You see, I was working as a CFO in a company, is a power generating company. There, I had beautiful, that experience of identifying the land and then bringing ultimately the plant. So in the process, environmental clearances and then, environmental impact report and all. And I was doing that, providing this information to the board of directors. I have some things to share, but we look forward for some other kind of a thing. But again, whenever you think in terms of that, it is not easy to do all these things. It is very difficult. As a management accountant, when you are giving whether you are a qualified chartered accountant, CMA or CSR, whether you are holding any position, MBA, that is all different. Your role is a management accountant. In that case, you have to give this kind of information to the board of directors. When you are giving the board of directors, it is not easy to get. You may not even get that. Many of the promoters would not like to talk on these issues. Many of the promoters would not like to talk on these issues because they would like to think only in terms of profits. So the point is, you have a lot of challenge. But if you go very positively, I have my experience. In my experience, I have found all my promoters, all my CMDs, all my bosses have been very good. I have given the information. They may not accept 100%. At least 70, 80, 90% they will accept. That's where your role as a management accountant. It keeps going on. We have to keep it going on with that. With these two examples I tell, and then I will close. Here, I am reminded of one. Tirukural. Tirukural is one of the very important literary, genius kind of a thing in Tamil. My mother tongue is not Tamil, so I don't know very clearly. Shakija Subramaniam will explain more better on this point also. What he says is, Tirukural is only 7-word couplets. Only 2 lines, 7-word couplet. Like Bhagavad Gita, we have 4 lines, basically 2 lines like that, no? Anushtup, Chandas and all. So in Tirukural, you have only 7 words in 2 lines. And beautiful meaning. And it's a beautiful kind of a distinct literature, and I always like to read that. So I don't know Tamil. I would like to quote that. This actually I quoted in ICAI. Pannivutayan insolan adal varuvarku aniyalla marupira. It says that Pannivutayan insolan adal varuvarku aniyalla marupira. It means humility and pleasant speech contribute one's ornaments, other things do not count. So humility and pleasant speech contribute one's demands, other things do not count. This is the important, that message of this particular Quran. So what it says is that you need to get the information from all the corners, and again you have to take that sweet information, rather that information in a very sweet way, smooth way, pleasant way to your bosses and the boards. Don't think that I am very highly qualified. I have held the positions in IFAC or SAFA, so that my board will have to accept that. It is not like that. If you want to have success through the management accounting, I tell you, management accounting is a beautiful subject. It's a really beautiful subject. As our, Nandaji has mentioned in the beginning itself, it's a beautiful subject. It covers a lot. It looks at a very wholesome picture. But to have success in that, you need to reduce the bias. For that purpose, you have to convince people. This quote is very important for that. And one more thing in Sundarakanda, अथवा नैतदेवं हि यन्मया परिसंगितं मानसा हि मम प्रीतिरुत्पन्न तवदर्शनात्. Because our young friend has our young friend he has read my resume and said that I have MA Sanskrit. No, I have to quote at least 1 or 2 slokas, otherwise I can't justify that I am MA Sanskrit. So Sundarakanda sloka says अथवा नैतदेवं हि यन्मया परिसंगितं मानसा हि मम प्रीतिरुत्पन्न तवदर्शनात्. It says अथवा नैतदेवं हि यन्मया परिसंगितं मानसा हि मम प्रीतिरुत्पन्न तवदर्शनात्. मानसा हि मम प्रीतिरुत्पन्न तवदर्शनात्. It's a beautiful sloka. You can read it because I don't have time. I will take only 2 minutes more and then complete this. So I will leave it at this on this point. The sloka meaning also you can read it later. If you want, you can always call me and I will let you know. I will take only one important thing and I will close with that. Another 2 minutes I think I am permitted to take. Nandaji, another 2 minutes. Okay. So now what I would like to share with you here is, see, as far as I think our he was mentioning. Sorry, my memory is small. Yeah, CA Bharat Thakurji was mentioning about that Nandaji or somebody that we have a role as far as the capital markets are concerned. And then what is that management accountant can play as far as the capital markets are concerned. As far as the capital markets are concerned, management accountants play a beautiful role. And at this point of time, I am reminded of one beautiful article. It has come in the Business Standard. Business Standard. It was in 2019, if I remember correct, when I was the SAFA president, because I mentioned this in the Bangladesh also. So in this particular thing, the point is that what is relevant for our management accounting, the point is that you need to provide information to the board of directors and the management, and including the regulators, including wherever we are holding such positions, regulators and even legislators. You need to provide this information. Management accounting can do a lot as far as this is concerned. What is that? That is, see, if it is possible, you read that. It was, I think, 23rd November or something in 2019 Business Standard on stock exchanges. That writer's name is Pradipto Bhakti. Pradipto Bhakti has written a beautiful article. What he has mentioned is that there is an organization called International Reputation. International Reputation. That organization's name is something like that. International Reputation. He said that there was a study by FTSE, that Financial Times Stock Exchange, London. FTSE is a London Stock Exchange. I think that all of you are aware of that. So that FTSE, they have that FTSE 100, FTSE 200, like we have Sensex and Nifty 50. They have that. See, as per his study, reputation of any organization, plays to the extent of 40% of the total market capitalization. So if you think in terms of a market capitalization of a company, he is 10 million or 10 million rupees or 1 lakh, 1 crore, whatever. Say for example 10 million rupees. In 10 trillion, see that we have many companies which have crossed these kind of things now. Maybe you have X market capitalization for your company. In that, reputation of that company matters 40% for the purpose of market capitalization. And out of that, 30% will be from the CFO, Chief Finance Officer, all of us, the chartered accountants, cost accountants, MBAs or company secretaries, whoever it may be. All these people's, that reputation will account for up to 30% of the 40% of the reputation of the organization for the purpose of building the market capitalization. Then imagine, I can quote some of the examples for that. But you see that where are the examples? Since we don't have time, I'm unable to quote that. But in any case, you can read that and you understand that this particular reputation is built. This particular reputation is built for the purpose of management accounting success, purpose of prospects, and that for that purpose, all the information is provided through the management accounting department. So this makes all the difference as far as the management accounting and its contribution for the purpose of the either market capitalization or sustainability report or triple bottom line or the MIS, whatever. And I think that I will close at that, and you can just slide move the slides, whatever in the flow I have told. The slides are whatever I have told, they are there in the slides. Yeah, this is people, planet, profit. Next. This is very important thing that all of us are aware of that. Only for the purpose of relevance I have put it here. We are aware of that. Management accounting and decision making, we have covered that. Next. Management accounting and performance. This is another important. You see, performance evaluation. What is performance evaluation? It is performance evaluation of the company, the department, the product, its results, making by alternates, and then that, as our Bharatji was mentioning, the South India, North India market, where is it there? So these kinds of things you need to understand, and inputs are available only from the management accounting department. And efficiency. If you see, the performance appraisal is very, very important thing. You have a role to play in that. Efficiency. Yes, we have understood what is this efficiency improvement and what role management accounting can play. Next. Management accounting and the precautions for its success. I told you, see, precautions for its success is accurate information, quality information, and then with pleasant information, approach the people properly. Otherwise, there is a chance that you get wrong information. That should not happen. And our Bharatji was also mentioning, Nandaji also was mentioning, that what is your relation with the external people, the stakeholders, the marketeers, the regulators, that auditors, external auditors, so on and so forth. You need to have that kind of compliance and ensure that things go properly. Then only you will have complete success. So be very with full of precautions for the success. Next. Certain areas, these are all the standard things that we read in the management accounting. We are aware of these things. Next. These are all fundamentals. Stock market, I have told you. Very good. Next. Taxation for chartered accountant, there is nothing that I can tell. There is a beautiful kind of an information that you can provide from your management accounting department to the board of directors and decision makers, and which will have impact on the taxation and whatever you need to pay to the outsiders, fees or taxation, whatever. Next. Enterprise, this is another important thing, enterprise risk management. And management accountants had a lot of role to play in this. Even a good management accounting department mitigates the risk. So you have an exceeding role to play, and management accountant, whoever is there in the company, must be part of this risk mitigating team or ERM or whatever. Next. Yeah, this is done with. Next. Corporate boards, we have discussed very closely, and we have covered a lot of points on the corporate boards. Management accounting is, I can tell you, pet subject for the board of directors and boards. It's a beautiful information that you get to the boards and they enjoy. But you have to convert that kind of information the way that they can understand. Next. Yeah, lenders is on information. You see that whenever you think in terms of lenders, they need more qualitative information about apart from the quantitative information. Quantitative information you get from the annual reports, but qualitative information you get from management accounting department. But many lenders do not know. They accepting asking for a few ratio analysis ratios or something like that. But beautiful information will be available with the management accounting department, and management accounting department, for the purpose of real benefits to the corporate body, they should share that information with the lenders so that they can get the beautiful deals with that. Even sometimes in the context of reduced interest rates, it is possible. Next. Yes, next. I have discussed about investors. Next. Yeah, this is what my presentation is. Loka samasta sukhino bhavantu. All the best to you all. Thank you, Nandaji, for giving me this opportunity. Thank you, Dr. Surender Pal, for kindly helping me in this presentation handling. And Shakidarji, thank you. All the best. All the best to all of you.
Thank you. Thanks a lot, sir, for such a wonderful presentation. And in the starting, you covered about the financial account. You covered that the financial accounting usually deals with the historical data. But as rightly quoted by you, the management accounting, it not only deals with the historical data, but also it deals with the present and the future expected information as well. and helps the management to take some relevant decisions to comply with the management objectives. And sir, in a very wonderful manner, you shared your thoughts all about the management accounting and the sustainability. It was really awesome, sir. On a personal note, sir, I would like to mention that I have also done PhD, and the topic of my thesis was related to sustainable development only. So it was really very much interesting for me as well at the personal level. And the concept of all about the triple bottom line, it was also very much awesome, sir. Though I have not done MA in Sanskrit like you, but I would like to sum up all your presentation with one verse from Shrimad Bhagavad Gita only. Yukta har viharasya yuk chestasya karamsu yukta swapna bodhasya yogo bhavati dukha. So we must say that your presentation was overall really very wonderful, very awesome, sir. And I believe that every participant who listened this presentation got some really very much important insights and touched some new dimensions about this topic. Thank you so much, sir, for your time and a wonderful deliberation, sir. This is the
Thank you. Thank you very much.
Thanks a lot, sir.
Thank you, Vinay Jamwalji, Chairman of Jammu and Kashmir
Right,
branch of the Institute. Welcome to Hyderabad. I am from Hyderabad, Jammu and Kashmir branch. Welcome to all of you. All of you are welcome to Hyderabad.
Thank you so much, sir. Thank you so much. Thank you. My pleasure, sir. All pleasures. Thank you.
Thanks a lot, sir. Now let us move ahead for the next session with the very learned speaker, CS Sekisher B. Let me introduce himself. He has about 25 years of experience in audit, taxation, and consulting. He has also experience as a CFO and the board member. For about 25 years, he has been involved in visiting faculty for management development programs for corporate executives through various prestigious institutions like XLRI, NISM, ASCI. Also, he has been trainer for board members, and also he is visiting faculty for CFO development programs for various large groups. He has the experience in serving large manufacturing, technology, and financial service related industries clients. And recently, he has served the clients in the investment management industry. He is a regular resource person for ICAI seminars. Like today, he kindly consented us to address on a very important topic of management accounting. I request B. Shakizan sir to start the deliberation, please.
Good evening to all, Dr. Chairman Nandaji, Dr. Jagan Mohan Rao, Mr. Vinay, Mr. Dheeraj, and Mr. Bharat Thakkar, Dr. Surendra Pal. It has been my pleasure. I thank each one of you. Am I audible, sir?
Yes, sir. Yes, perfectly.
And the slides are slide is visible, sir?
Yes, sir. Slide is also visible.
Very good. So it has been my pleasure to share my views, and the topic is already been exhaustively covered by the other speakers. However, I will do justification for some more topics in the next few minutes, and I thank the committee and the chairman and I'm sure that Mr. Nandakishore Hegde also will join at the end. And I think can you? The topic, I think Dr. Jagan Mohan Rao has exhaustively covered this topic, and he has mentioned that how board has to look at how the information to the board should be should be reliable, so that the decisions are correct. And management accounts goes the right into the decision making. And I'm sure that I thought I'll share this interesting snap with all of you that when this before pandemic, nobody would have imagined that a security guard will be doing this type of role. the type of decision making and the type of information gathering which is taking place both at even the society level. So the topic discussion is current business environment, how business excellence and accounting concepts, how the business growth, what is the focus should be on of the finance department and the leadership which has to come from the various people on using these techniques on decision making and running the company. So, see, if you see the current decision making, current business environment, you have on one side consumer not willing to spend, and the other side business is trying to get businesses to create revenue and make into the reality of how to make this consumer spend. So there is a very different economic situation currently across the globe on the spend, and digital way of running the businesses has become the order of the day. The focus has been on health, and people are not willing to spend. They're conserving cash, and establishing customer trust is the major focus. Job losses and uncertainty continues with the second wave, and with the vaccine coming in, there is a sort of at least some comfort. And business continuity challenges are continuing. Supply chain disruption is across the geographies. And local focus, people are focusing on local rather than global. And digital online e-commerce is the order of the day. So you find almost digital meeting today. Travel has become redundant and things like that. Finance excellence, I will focus on, and business growth and monitoring business growth is the focus. People are looking at decision making, but management accounting provides a variety of data. But however, one has to look at what is the relevant one for the decision making. So management accounting has quite a few concepts, and I'm sure while the success comes in the application of these principles, I thought I'll focus on how we go about it. The target market, our Mr. Bharat Thakkar has mentioned, are you looking at Delhi? Are you looking at Chennai? Are you looking at Calcutta? Target market, what is the target market? What are the information relating to the target market? What are the consumer preferences, and what is the consumer data which is there? How is the logistics with reference to that, and how the cost and revenue and margin for that particular target market, which will make the difference for the purpose of and investment decisions for making the product reach to the customer, how close to the customer, whether your factory will be close to that particular thing. Are you going to outsource the contract manufacturing? Are you going to keep this technology with you, or are you going to have technology also gets outsourced, or whether the business process outsourcing is going to be used by business systems for the purpose of variety of decisions. And the product service offering. Many times, if you see companies like Hindustan Lever or Unilever, our Dr. Jagan Mohan Rao talked about triple bottom line and sustainability reporting. The product, what is the product? What is the service? What is the offering? And you find in companies like that, you have 52 P&L accounts, we have 1,200 product lines and things like that. What is the product? What is the service? What is the offering? So management information system has to gear up to distinguishing your offering and key. See, in many companies, very large companies, you have nowadays you have a separate department called business finance department. So business finance department provides quite a different type of information for variety of purposes, for quotes, for decision making, for variety of requirements. People do that. So in a very complex business environment, we need to have information system available for variety of the product and service offering. And in companies, many companies, critical customer need has to be addressed. You see people, companies like Procter and Gamble, or you can take like Walmart, or even companies like in India. Currently, you have Reliance Retail, and you have Future Group. See, what is the critical customer need which is being addressed by the company? If you see companies like Walmart or any company, they go into at the end of the day, it is the critical customer need which has to get captured, and then the business system should gear up to deliver that customer need. And what is the purpose, how is that information get captured, and how is that business systems are integrated in order to meet this critical customer need. The next area which people focus on the competitive position. See, the management information system and market intelligence has to constantly look at where are we with reference to competition, how are we with reference to competition, what is the customer offering from competition, what is our relative position as against competition. So this is another area. So why I am discussing this is, unless business systems and the management accounting and information system understands the decision points, the system will not be these requirements, and strategic competitive position will be lost out, and it will be too late to make amendments in order to again capture the market share. Then the positioning, you need to understand at the end of the day, how are you positioning today? Post COVID-19, people are trying to get digital offering, digital way of reaching out to the customer, digital way of getting the response. Today, suddenly, whatever the next 5 years we would have achieved in digital, today it's already been achieved in the past 1 year. So positioning becomes very critical. How are we going to that target customer, or to the target market, or to that what we are offering? How are we? Many times consumers don't know what they need, and many times corporates have to go and educate the customer that there is a way. Customer experience becomes a very important. Till such time the Apple came with that smartphones, customer did not know that it is possible to have a handset like that. So positioning becomes very crucial, and management accounting creates a variety of information and decision points in order to fulfill that. Many times people don't know the difference between price and value. See, the value is different, and this is where even I would appreciate. I would remember Mr. Jagan Mohan Rao's saying the triple bottom line and sustainability. How our corporates are going to be socially responsible, and the value which they create. The company, very large companies like ITC and Hindustan Lever, Hindustan Lever is currently focusing on water. And you find the companies, Microsoft chairman is talking about climate change. So the value, today the value is more critical than the price, and always the goodwill and the brand image, or the reputation of the company is dependent on the value which creates on the thing. And in the management accounting and financial management reporting, sustainable reporting, triple bottom line, and creating value is the focus of management accounting, and the price and the cost and the profit. So all are interrelated, and one has to look at what value which the company is generating and how value gets captured. And you find many variety of techniques. I'm going to value analysis. For example, in the past 1 year, luxury value has taken a backseat. Necessity value has become the basic order of the day. So you find the luxury segment first 6 months of pandemic, luxury segment got into problem, and you find foreign travel, you find airlines, and you find fine dining and all got into. So value analysis. There is a technique called value analysis in management accounting, and you find the basic values have taken a front seat as against luxury value, and the focus has to be on what is the value which you add, and how are you going to and you have a variety of techniques on pricing, and you find not only from internal source, but from the marketplace. You determine the price and come back to the company and decide on how to benchmark the price as against the new types of offerings which people produce. So and the deliver results to the consumer. See, customer. At the end of the day, all the business systems should be interlinked. Then the final product has to reach the customer according to his requirement. During the pandemic, the supply chain has become the focus, and you find the Chinese supply chain to the rest of the world has got into some sort of an issue, and you find suddenly people are focusing on domestic sourcing and how are we going to get. And India has done a wonderful job in vaccine production and vaccine supply to the global market. So this is a very different focus which business should look at. Deliver. How are you going to deliver results to the customer, and how variety of information systems and business systems should work together to deliver that result to the customer. For example, last year we had an oil. In fact, oil price became negative, and you had a situation, and you find completely in the Indian stock market, Singapore stock market, London stock market, and the US stock market. And one area which never stopped is the capital markets. You find at the end of the day, you have to provide liquidity to the investor, and stock exchanges have put a huge amount of investment in technology in the past. So definitely, at the end of the day, your business system should are supposed to interlink with each other finally to deliver results to the customer. And management accounting plays a very huge role in integrating all these systems into see that the customer is happy with this. And business systems are supposed to be in place. This is where the risk management and cash flow focus and the budget versus actuals and standard versus actual variance analysis and things like that comes into place. So business systems are supposed to deliver results, and they have objectives to be achieved, and business systems are supposed to achieve certain objectives, and those objectives have to be met by the respective functions or the departments or the business units. And you have variety of systems like transfer pricing, management information system, and profit centers and things like that. So business systems are one of the focus areas, and I'm sure that we go into the next area, which is the attracting top talent. You see, attracting top talent becomes very crucial. During pandemic, you find, I have found out in Mumbai, you find the huge amount of cash flow, investment flow which has happened. And today, while people are working from home, even people are hired at home. People are resigning from home. So attracting top talent is the common. Whether you are a 1 crore company, whether you are a 10 crore company, you want to move to 10 crore company. From 10 crore, you want to become a 100 crore company. From 100 crore company, you want to become 300 crore company. From 300 crore company, you want to become 1,000 crore company, or 1,000 crore, you become a 5,000 crore company. Attracting top talent is the very important. And the information about talent, whether they are working, artificial intelligence, employee engagement, you have a huge amount of data which needs to be collected and worked, and people, and many times I find one difference between successful companies and not so successful companies is this top talent. The successful companies have best talent in the world, and they retain them, and they motivate them, they engage them. So this is another very big area, labor, and we have a variety of information relating to hourly utilization, employee key performance metrics, and you find KPIs to be achieved, goals, and learning, and non-financial data like new product development and R&D scientists, how people are working on R&D research and development. So attracting talent is one another big area which has to have a place in the management accounting. And you find accessing sufficient capital is another area which the the managements have to focus on. And during pandemic, you saw huge outflow on more than 1,20,000 crore has come into more than that. So you find a huge amount of capital, and I am telling you that capital budgeting decisions and the type of information which has to be assessed, and the type of data which has to be provided to the board to take decisions on capital working capital management as well as capital budgeting decisions. The management accounting plays a very huge role, and one area which is constant in any, you will find even a loss-making company can survive provided you have enough cash. So cash is the king, and companies which have excellent project management cash generating mechanism in place. People are holding cash, they will survive forever and they will be successful ever. Accessing sufficient capital, you need to have a robust cash generating cash flow management, operating cash flows, financing cash flows, and investing cash flows. So you find cash management becomes the heart of successful companies, and investors don't give a good weightage for companies which don't have robust cash generating and cash monitoring, cash deployment systems in place. And I'm sure that the management accounting is the foundation for such type of companies which have always sit on cash and which are always successful in generating cash. And the processes and technology is another area which management accountant should integrate itself with. See, the processes, you have ERP systems, you have MAS, management information systems, you have transfer pricing mechanisms, you have profit center mechanisms, and you have processes should speak for itself, and the technology should be always embedded with these processes, and then the information should be online real time, and it should be shift wise, it should be on a real time basis. So this is another area, processes and technologies, and processes and technology should be so robust, and they should be close to the customer, and the customer's focus should get integrated into the processes, and definitely such companies will do well in the long run. And evolving an organization and its culture. Today people are working from home, and already many companies have announced that they will move towards working for permanently from home and working from anywhere. You have companies like but however, you have companies like IBM who have tried working from home in the past, and they have gone back to not working from home at all, because IBM has originally tried out working from home, and now they have, before pandemic they said no, working from home is not helping our organization culture and also managing the performance. So they decided to move away from working from home, and now pandemic has created a situation where people are looking at going back. Today, say CHROs, Chief Human Resources Officers are looking at how to engage the employees, how to create them to work in teams. How there is a lot of stress on people. Today, people are working from home. Actually, he's putting a lot of pressure on people. And one of the burning hot topics is mental health. And you find people want to go back to offices. They want to go out. They want to meet people. They want to go to restaurants. So you find digital way of working has created its own challenges, and evolving organization and its culture, and keeping the employees engaged and getting how to get the KPI and KPI achieved and goals. How do you make them as one organization? And this is a very big area, and CHROs would like to have data presented to the board to justify how organization culture is evolving and the current situation, and management accounting and human resources. And you find companies like Infosys, TCS, Cognizant, you have all of the Microsoft, Google, all of them are currently trying to work around how to keep the employees motivated and focused using data. And you have huge amount of data which keeps flowing in the HR systems for these type of purposes. And one of the biggest area is the risk management has been a focus, and risk management is all about whether the board is getting up to date information and relevant information on managing the risk. You have operating risk, you have market risk, you have interest rate risk, you have a variety of risks, and you also have risk intelligence. I call it as risk intelligence because risk intelligence is missing opportunities today. Every organization is looking at how to get a digital customer, how to make their offering to digital offering, how to ensure that they reach out to the customer with the whole of logistics to the supply chain to reach to the customer who is sitting at home. So, and you find new set of customers coming in, and old set of customers have already exited from your company because of variety of reasons. Managing risk is a focus, and management accounting has variety of tools in managing the risk, and the right time the risks are identified, right time the risks are mitigated, right time the risks are addressed correctly, and how are you going to see that you are risk-free entity and you are going to sit on cash, and how you are going to look at it. And another area is constantly evolving leadership pool. One area where I have seen the successful companies and not so successful companies is leadership pool. See, you create multiple profit and loss accounts, multiple business units, because you have multiple leaders who can drive those P&L accounts. And the leadership pool is the management accounting gives variety of concepts like responsibility accounting. You have investment center, you have cost centers, you have revenue centers, you have. So you find leadership pool is another area where you constantly groom leaders, and those leaders generate revenue and they create market opportunity. They work on new products and they work on product life cycle. Is another area which management accounting addresses. So leadership pool is another area which human resources accounting used to be the focus in the past, and I'm sure that with the new concepts evolving, you find management accounting provides a huge opportunity for growing the businesses to the next level of and the candor, openness. We talk about openness. Communication, internal and external, is a very constant. Management accounting constantly gives information about past and future, and communication internally, communication externally. If you see the board of directors report or annual report of companies, the successful companies give all a variety of information and investor relationship. So keeping the employees motivated, driving the performance, driving the goals, achieving the goals, allocating resources, taking the right resources to the right businesses, and pricing decisions, ensuring costing is under control. So communication internally and externally, you find management accounting has a huge amount of tools and variety of information which are there. And the next area is employee motivation. You need to constantly motivate employees. You need to see that they are involved, they are informed, and you take back the information from them to for example, company like Xerox Corporation lost out people because they had the ideas and nobody listened to them. So those ideas went to Apple and Microsoft. So you find if companies which are successful always listen to their employees and they treat them as part of the entrepreneurship, and they try to ensure that is where the companies like Google and Procter and Gamble, all Hindustan Lever produces the leaders of the future. So you find you see employee motivation is another area where how the information gets collected, how information gets shared, how information gets captured and passed on to the management. So and my focus next few minutes is going to be on strategic decision making and strategic insight. See, a management accountant is not going to be traditional. He is not a normal accountant or anybody, but he is a strategic decision maker, and he is going to provide. And he's not a normal employee. The role of the management accounting is that of a strategic service provider, strategic differentiator in the company, and the corporate success will come from this strategic role role, and I'm going to focus on how chartered accountant and management accountant is supposed to perform a strategic role rather than operation role. So this is the basic premise under which I am presenting my decision, and one area where management accounting is planning, decision making, and control. And planning, decision making, control, we all know what is planning, and we all know what is decision making, choosing among the alternatives, allocating resources, and controlling means constant monitoring. But there are three distinct steps involved. One is strategic decision making, which is the long term. And then there is tactical decision making, which is midterm, and there is operational decision making, which is day to day, shift by shift, day to day basis, monthly, weekly. So you find the management accounting has to provide information on all the three levels: strategic decision making, tactical decision making, and operational decision making. And many times large companies, many times small companies don't grow to the next level because they're not able to distinguish between operational decision making as vis-a-vis strategic decision making. And many times the board of directors get confused between strategic information and operational information. So if the management accounting is able to provide very distinct different information. So if you see capital budgeting decisions, you have your strategic, it is more of strategic nature. Whereas you on a day-to-day, daily shift-wise production management or allocating of non-moving, slow-moving items, finding out the reorder level quantities and things like that. So you find many a times you need to distinguish between the strategic, tactical, and operational inputs, and operational data flow, and operational decision points, and operational decision people who are going to implement that. Resource allocation and monitoring will differ. And here in this area, management accounting provides a complete solution for companies to become successful. And those companies which are becoming successful or which have become successful are able to see the difference between strategic data, tactical data, and operational data, and management accounting is the only provider of this information, and that is how the distinction is taking place. And non-financial data, many times customer feedback, complaints, non-delivery of items, the return of items, your whole set of non-financial data is so crucial for people to understand. If I am having already a supply chain, and why not I introduce a product at variable cost so that I capture the market. Today, what Jio has done is exactly that, and all the other telecom companies have gone into losses. See, non-financial data is so huge. You need to see how a non-financial data is making sense, how non-financial data is going to make decisions, how non-financial data is going to be captured, and then you don't lose customers. And how the data, see, today, one of the biggest problems for many companies is the data cyber security. So you find cyber people are having looted. You have banking system is full of frauds. So because of the technology is not up to date with the cyber crimes which are vulnerable. People are using systems at home, and today data volumes have gone up. So you need to see that how long-term decision making like R&D, maintenance, new product development, and L&D, learning and development investments are taking place, and management accounting has to provide for such non-financial information which is relevant for decision making. Today, you won't find a company like Google had they not invested in technology for the purpose of search engine. Or if you read this AWS of Amazon, you find that they had quietly, while everybody thought they are selling books, they are quietly building AWS, and today they could make a lot of difference in the marketplace using the AWS. And many times people get saddled with rudimentary data. They get saddled with a huge amount of data, and they don't invest in performance improvement. See, one has to constantly reinvent the wheel, and you need to keep on working on areas where there are requirements. The other day I found that NSE is stopped for a few hours, and the loss was so huge. The capital market did not function for a few hours, and you saw the amount of the loss which was there for the amount of the opportunity loss which was there for during those hours. So and companies should look at future, and they should invest in making decisions and see that the processes are robust. And one area which I thought I will highlight to the participant is this responsibility accounting. You find companies not growing because everybody thinks that there should be only one MD and one CEO, one CFO, one chief of marketing. But the companies which grow have multiple P&L accounts, multiple geographies, multiple offerings, multiple P&L accounts, and multiple continents they work. Coca-Cola, for example, when Coca-Cola USA got into profit loss problem, but Coca-Cola Global gave money to them because the CEO took a personal decision and invested in global market much before the company agreed to invest in the global market. Well, Coca-Cola. So responsibility centers. Who is responsible for what? Finally, the management, the crown for the leadership is responsibility. So how the responsibility always doesn't flow top down, it goes bottom up. So responsibility center, who is going to be responsible for what region, what products, what new revenue streams, what development, what functions. So the responsibility center, concept of responsibility center is totally different from normal things, and Indian companies have gone global, and global companies are having multiple responsibility centers across, there are, Asia Pacific maybe controlled at Singapore. Maybe there are companies which Middle East also gets included in Asia Pacific. There are companies where Middle East Middle East and Africa get into one region. So it depends on what product and what geography and what are the dynamics of the responsibility centers and the revenue centers. Who is it? See, I know companies which are very successful. Indian Postal Department, PIN code wise. The other day I was dealing with one financial services company, and he says, "You tell me the PIN code, I will find out how that thing will happen." So revenue centers may be geography. Indian Railways has nine geographies which are revenue centers. So you find the different dynamics of data management. So in the banks, Mr. Bharat Thakkar was telling, maybe you may have data for financial products and non-financial LC margin, non-fund based activities. So revenue centers, cost centers is a huge concept. Cost center, how do you manage the cost? How do you capture the cost? How do you identify cost? How do you control cost? How do you reduce cost? How do you see the cost center concept? And how do you integrate the entire organization into different of these, and how do you manage that? So many times efficiency get built up through cost centers. You are able to go up to the individual customer level and manage the cost. Profit centers, how is the concept of management information, how the profit center, how do you transfer pricing mechanism, management information system. Profit centers are very different. And investment centers, today you have Tata Sons case last week, Supreme Court decided. But you see the investment center is the Tata Sons, and you find a very different growth prospect. Today, family offices are able to call shots because their family office, the decisions are taken at the family office level. Maybe a group has a power plant, maybe a group has coal mines, maybe a group has steel plants, maybe a company has a lot of data. So you find investment centers. Today, if you see, Reliance Industries has worked as an investment center to collect the money and then work and deploy the money backwards into the multiple businesses. So they have reorganized themselves into oil and gas separately, as against digital businesses, as against telecom businesses, as against retail businesses. So the concept of investment center. So you find there is a lot of link between the management information system, HR, and how you identify business objectives, how do you manage and measure performance, how do you capture data and control the performance, and how do you keep on monitoring the business. So this entire 5 concepts are providing very successful growth secret to many companies which do not deploy this. And I'm sure that there are companies which have not even bothered to go into what is the revenue center or maybe a profit center and things like that. So such companies will be handicapped. This is what happens to when companies get into stock market. When you go from a 500 crore into a stock market, capital market wants you to become a 2,000 crore company. From 2,000 crore company, it becomes a 10,000. For example, from the year 1995 to 2000, this L&T came out with a separate concept, technology leadership vis-a-vis business leadership. So that and L&T used to have a huge business responsibility centers. They used to have very different businesses within the same. Today, all those companies have been put into a different buckets, and they have all been separate listed companies and things like that. So this management accounting provides an excellent tool called responsibility accounting for the purpose of growth, and many companies should use that. And I'm not getting into this. These are all the standard management accounting tools. I'm not getting into these concepts, well understood by the professionals. And you have a huge amount of success diamonds inside management accounting, and some of them are these. I'm sure that each one of you are using this. Budgeting, for example, is an amazing tool. For example, we have in India, we have so many municipalities, and the entire municipal system works on budgeting. And I have seen many successful companies. Budgeting has been the foundation for their performance management and resource allocation. And the capital budgeting and standard costing, I'm not getting into that. Another area is measuring performance. I thought I will spend some time, and I would like to make this participant look at strategic view of managing performance. Revenue growth and revenue mix, and revenue. The revenue is at the bottom of the pyramid in management accounting for decision making. And how are you going to drive the entire business system for revenue generation and revenue growth, and cost reduction, productivity improvement, and asset utilization and investment strategy. These three are the foundation for strategically looking at managing the finance area. And how are you going to look at ROI? How are you going to look at revenue? How are you going to use the asset? How are you going to look at the investment strategy? And this complete focus is balanced scorecard I have taken from there, and the finance professionals have to look at that. And customer, at the end of the day, the successful and not so successful companies, the difference is customer focus. So customer focus should be the strategic focus. Market share. What is the market share? Where are we with reference to competition in each market? What is in each market? What is our revenue? What is the competition revenue? Who is doing well? How are we going to address the competition? And it is both operational data and non-operational data, financial data and non-financial data. Even van operation, you operate vans, FMCG companies work on that. See how are they, how route wise you do, product wise you do, category wise you do. So customer retention, customer acquisition, customer satisfaction, and profitability. So how are you going to measure that? How are you going to capture that? How quickly you will have this data? How reliable this data is? How accurate this data is? How are you going to make decisions? And this strategic, I recently heard a chartered accountant who is heading Hindustan Lever, the managing director chairman, is telling that and or. He said it is no longer or. This or that, no, this and that. If I give washing machine powder, I will also have to give detergent powder. I have to give also the cleaning chemical which is going to be used for washing the floor. So it is not and or, it is and. So how are you going to work on data? How are you going to work on decision point? How are you going to make people accountable for performance in this? How are you going to drive the daily targets and daily weekly targets and supply chain to see the product is available on the shelf in front of the customer when the customer is there? How are you going to have digital walk-ins? How are you going to make the digital product visible to the customer? So today the strategy has changed. Companies are looking at digital, and digital is the order of the day, and people are spending millions of rupees on cyber security and things like that. And then internal parameters. How are you going to look at quality? I was seeing the other day one company spoiled onions are being delivered to the customer. That shows how poorly inventory may be available as per the data, but that inventory is not the good quality. The quality means at the end of the day, are we meeting the established norms of goals which the company wants to achieve? Quality, response time, how quickly, how quickly you go. See, this is why I would say a company like Amazon fine-tuned their offering of books. They used to deliver books, and that books they try to work backwards. Today, companies like Google are having heartburns because you find IoT platforms of this Ola and Uber coming from Google Maps. They are using response time. The customer says that the cab will reach in 2 minutes, and in some 2 years back or 1 year back, some Amazon shop got looted. But they could track who looted what, because that cameras showed who did what. So the response time, cost, and new product introductions. So these are the strategic decision points which have to be embedded into the management information system in order to make the decisions relevant. So this is another area where I have dealt about this employee satisfaction, employee retention, and employee productivity. See, it is again a very important area of productivity. Productivity, we have a variety of tools which measures in management management accounting on productivity. How are you going to have less wastages? How are you going to ensure that the reorder quantities are ideal? How are you going to ensure that you are managing just-in-time inventory? All these things, very, very interesting areas, and I am sure the successful companies like Tata Consulting Services or Infosys or any of them, employee is the focus. In services company, employee is the final important person, and strategic employee will make all the difference to the company, and companies are focusing on information relating to employee engagement. So you have surveys and things like that. And one technique which I thought I will share with the audience is benchmarking. See, one area where successful companies not only look internally but also look at externally. So internal and external. So 60% internal, 40% external, or 60% external, 40% internal, or 50% external, 50% internal. So you need to constantly look at external environment. So you need to see where the outside world is. Many times people don't realize, and the concept of benchmarking becomes a very, very interesting tool for the purpose of successful companies. If you see whatever the top 500 companies which are there in the successful list 20 years back are no longer there because they are all gone. They have collapsed or they have gone out. But if you see the real list for the past 100 years, 150 years, there are successful companies, which are there. That they are there because of their constantly benchmarking. They are constantly evolving. They are constantly looking at themselves with other companies, with other people, data gathering, comparing level of performance. Then the need, for example, Procter & Gamble sends people to the house of the consumers and trying to benchmark whether they can do a new offering or how they are using existing products and what they are doing with reference to cleaning the utensils or changing the bed sheets and things like that. So this benchmarking is a very wonderful tool available for companies to constantly balance between internal goals and external opportunities. So this management accounting provides a wonderful area: internal benchmarking, competitor benchmarking, functional benchmarking, strategic benchmarking. You create, what is happening. For example, automobile companies come together and say what is the number of two-wheelers sold, number of four-wheelers sold, and export versus import. So there are a variety of industry benchmarking which are available for grown-up industries. The upcoming industries are still supposed to make certain data available, but definitely this benchmarking is one wonderful tool which constantly keeps getting used by successful companies. And you do have to do planning, you need to analyze data, you need to benchmark, and you need to do action, and you have to monitor, and then you have to do this tool is one. I mean, somehow I felt in management accounting professionals is a very, very important tool, and this I felt I should highlight. And future ready finance, we need to partner with business. If we are not partnered with business, this is what Dr. Jagan Mohan Rao also mentioned, Mr. Bharat Thakur also mentioned, and our chairman Mr. Nandaji mentioned that the management accounting is supposed to partner with business to provide relevant information at the right time and accurate information, and it is not only internal information but also external information. So business partnering, decision making, and resource allocation, and that will automatically drive value creation, and you will find that people are focused on value creation, and the business systems are not working towards business systems always addresses customer complaints, customer grievances, customer wants and needs. And definitely it is a strategic process, and many times people get into saying that it is not strategic or it may be routine information provision. No, it is strategic, and I am going to discuss with you what is strategic and not strategic. I have some slides which are there in the presentation. And the risk intelligent. What is risk intelligent? Opportunity. It is not only a risk means people always look at negative side, but there is an opportunity. For example, water. Water was an industry. Some 15 years back, water used to be, water was not there. Today, water is more than 10,000 crore industry. So you find risk intelligent means, are we missing out opportunities? Are we looking at, future in the right way? How are we creating value using the opportunities which are available in the marketplace? For example, Hindustan, the Unilever, immediately, the moment they saw that pandemic is coming, immediately they went into this, the hand cleaner segment, and then created capacity. You see, vaccine manufacturers immediately, got together their action, and what could have been done 5 years by vaccine development takes such a long time, but risk intelligent methodology has helped them to ensure that the vaccine reaches the market, and Indian enterprises have rise to the occasion to become a global benchmarking in pharmaceutical industry for the purpose of risk intelligent. It is opportunity identification and responding to the opportunity which is available at the marketplace. And at the end of the day, it is a leadership, and you need to be the leader to become. The finance leadership should be authentic. It should be genuine, and people should provide right information. People should provide trust. They have to create that trust. And management accounting provides all types of tools available for ensuring that you become the leader in decision making. And the leadership of finance team will be able to become a differentiator, value creator through management accounting. And I'm sure leadership generation and management and finance in large companies. You take any large company where more than 2,500 finance professionals are there, and you will find about 15% of them are in business finance, which is management accounting. So leadership benchmarking, authentic leadership. Respect will be created. People will trust you if you use management accounting, and I'm sure that CFOs get into this. I thought I'll spend some time on this. See, from an operator, business compliance, giving data, provision of information, filing of the return and creating the financial reporting process. We move towards steward, protects, preserves critical assets and organization, accurately reports the financial position and operations to the internal and external stakeholders. So from an operator, CFO level, so many practicing chartered accountants are nothing but 25, 30, 40, 50, 100 clients. They will be CFOs. They are director of finance. They provide information. They help the management. And you find operator, many times we remain operator, but we need to move towards steward, protecting, preserving assets, and accurately managing. From there to catalyst. Catalyst means we execute strategic and financial objectives while at the same time creating a risk intelligent culture. From there, you move towards strategic. So from strategic, this is where the management accounting provides. Management accounting is not about past. It is not about present, but it is about future. It is about decision points. It is about resource allocation. It is about how you are going to grow your company. So I find that as a growing professional, if you are going to provide this information, I got it from Japanese site, and comparison between Japanese CFOs and American CFOs, and they find that Japanese CFOs are more of operators than strategic, whereas American CFOs are more strategic in nature. So I find the management accounting helps you, when you go for capital allocation, mergers and acquisition, financing, or long-term strategies. Management accounting provides inputs and tools which makes you to become strategic. At the end of the day, you need to be more strategic rather than operator. And I am convinced that every chartered accountant and every accountant has to balance between being an operator, being a steward, being a catalyst, and also being a strategist. And I am convinced that, I am not a great speaker like Chairman Nandaji, but when he puts the mic and he speaks, the audience will be totally, engrossed. So, but what I am trying to tell is, at the end of the day, we need to balance between these four areas, operator, steward, catalyst, and strategist. And steward is with reference to financial regulation, books of accounts, communication of the value. This is a financial reporting. An operator is supposed to be for financial planning, treasury, for example, treasury management, taxation, and other operations, and capital budgeting decisions, structuring of transaction business, leasing, and contract manufacturing, and things like that. And strategic role is with reference to influencing the decision making. This is where the management accounting plays a very huge role, and we need to provide strategic inputs and strategic insight to the management and catalyst. And I have given certain points for discussion, and I would like to you to take this. Many times you budget, pricing decisions, new business plans, budgeting, resource allocation, SKUs, analyze profit and loss of each product and services, and pricing decisions, inventory decisions, where which product is going to be where, and how are you going to move the products according to the supply chain and logistics, and lead the cost reduction, cost control, and cost reduction without impairing the quality. You find concepts. And I think, I thought I'll share with you this interesting information about a husband going to office, saying that now that lockdown is over, I'm going to office. Do you want anything? Wife is very relieved, saying that is enough. So I'm sure all of you are going to go and have a nice dinner. And I think I thank Nandaji and Mr. Vinay and Mr. Dheeraj for giving me this opportunity. And I thank Mr. Surendra Paul. And I also thank my co-speakers, Mr. Jagan Mohan Rao and Mr. Bharat Thakkar, for sharing their insight. And I will be happy to take any questions, and it will be my pleasure to join you all. And thanks a lot. Thank you very much.
Sir, thank you. Thanks a lot for such a wonderful address. And the way you have covered about what should be the business focus in terms of the management accounting decisions, and especially the concept of evolving the organization and the culture. It was really very insightful, and you have very well explained about the planning and the decision making, and also about the use of the non-financial data in the management accounting, and a very relevant thing all about the management accounting, that is the principles and performance measurement, the measuring the business strategy and all these things. So these were really very much helpful for us to learn a lot. And other than this, sir, you have discussed about the responsibility accounting. I believe two important things out of your presentation. One, all about the responsibility accounting. Another important thing, that was the benchmarking as an important tool for management accounting. Both the concepts were really new and insightful for all the participants. So thank you so much, sir, for taking out such new things, functions, and referring new terminologies in front of us so that we can learn a lot from your deliberation. And it was really a great session. I was looking at the questions, though there are no too much such specific questions. We have received some remarks from the participant, and that was all about the summary of the presentation by all three very learned speakers. Just to check if we have received two or three more questions. Participant asked for the PPT. Yes, we will share the PPT. You can download from the Digital Learning Hub. And one participant, Mr. Nilanjan Mazumdar, he mentioned that the concept of management accounting has moved to the next stage of financial planning analysis, reporting, and forecasting. So, though I believe that all the three speakers already have covered what exactly Mr. Mazumdar is saying, any of the speaker who would like to add something on this, that how the concept of management accounting has moved to the next stage of financial planning, analysis, reporting, and forecasting. If any of the speaker would like to add something about this.
See, I will see. I will tell most of the large companies have got something called business finance. So you find today while you have financial reporting and treasury management, but there is something called business finance. So people have bundled the entire management accounting into business finance. So you find the decision making getting structured way in a large enterprise through business finance inputs, and nothing moves without business finance approving certain important information which is there. So I would request other speakers, my other speakers to because Mr. Bharat is from financial services industry, and Mr. Jagan Mohan Rao is all in all. He talked about sustainability and triple bottom line. So I would request other speakers to contribute.
Yeah, Bharat sir or Jagan sir, if you would like to add something, what suggests sir already conveyed. You can unmute and Jagan sir, please unmute yourself. Jagan sir, please unmute yourself. You are mute. Please unmute yourself.
Yeah, you see, it is whichever department it may be, whoever may handle. Ultimately, the end results are important. So you can name it in whatever way. Ultimately, it must be that it is that what is that what is that pudding that is there, na, that unless and until it is sweet, you can't call it as a sweet. That's all. Proof of pudding is there in eating.
Proof of the pudding is there in eating.
Thing is there in the eating. That's all.
Very well explained by you, sir. Thank you. And sir, if you talk about the conclusion of the entire session, what we have learned, I would like to mention 2-3 factors which I have noted down from this entire session. Learning can be concluded like the management accountants are not only the guardians of the organization's financial process, but also the management accountants can be considered as the innovator for the who use the financial tools to achieve the business objectives. It can be said the essence of the entire session. Also, we can mention that the management accounting can be considered as the distinct type of accounting function, which is more concerned about providing the financial information that helps for the management decisions, not only more strict with the historical data. And also we can say that this is not limited to day-to-day operations, day-to-day accounting only. It can be considered for helpful and useful for the long-term business decisions also. Rao sir, you would like to add something, like you raised the hand?
Yeah.
Yes, sir. Yeah, please.
I want to, I see that you are now as a team member in the management accounting. You are addressing the United Nations Development Goals, UN SDGs of 17, and this is what is IFAC study paper which I told you. IFAC released a study paper. Under the supervision, under the management of IFAC, there is going to be international sustainability development standards which are going to come, which will be part of all of us, the professionals. So the management accounting is part of not just for one company, one industry, one country, but the entire, not only the earth, entire globe, universe. That is what United Nations Development Goals and the Sustainability Development Standards. If you read that paper, 20 pages or something like that, you will see what is the importance of the information and management accounting information that we speak about in the sustainable development goals and sustainable development standards that are going to come. So it is a very, very wide picture, wholesome picture. It's a great seminar. I can say that I should congratulate Nandaji and all of you, the team members. A really great program. Thank you.
Thank you, sir. Thanks a lot. And indeed, I agree with you that the very wide range of knowledge has been covered by such worthy speakers, you, Sekijar sir, Bharat sir, and Nanda sir. So there are a lot of things to learn, and very specifically, you mentioned about the sustainable development goals of UN and sustainability reporting, sustainable standards. So this is the high time for we professionals to understand the importance of that, and to link that how the management accounting is working in this regard. Really very insightful thoughts, sir. And though we don't have much questions, so this is time to conclude with the vote of thanks. But before I invite C. Nakul Saraf, Secretary of Jammu and Kashmir branch, for vote of thanks, I would like to mention very special thanks for learned speakers who covered lot of things for us. Even especially myself, who have done PhD in sustainable development. For myself as well, there were a lot of new things to learn from this entire session. And I am very much sure that every participant who joined this program virtually, he or she will be able to learn new terminologies and touch some new dimensions about the management accounting. So wonderful concept of management accounting as a key for the corporate success have been discussed by learned speakers, CA Bharat Thakkar sir, Dr. PVS Jagan Mohan Rao sir, CA Sekizar Balasubramaniam sir, and it was very well started by none other than Chairman of the Committee on Management Accounting, CA Charanjot Singh Nandaji, who is a very dynamic leader of the profession. And none other than we have to convey our thanks, especially Dr. Surendra Palji, who is secretary of this committee, and the respected speakers and all the participants. I would like to mention that everything has been managed by Surendra Palji, and he is the pillar of this entire committee and for this program as well. And to move ahead for vote of thanks, I invite Nakul Sharaf, Secretary of Jammu and Kashmir branch of NIRC of ICAI, for formal vote of thanks. Over to you, Nakul bhai, please.
Thank you, Dheeraj ji. Good evening, everybody. On behalf of J&K branch of NIRC of ICAI, I propose a hearty vote of thanks. We are indeed grateful to the distinguished guest speakers and the audience for today's event. I must mention the eminent speakers, CA B. Sekizar and Dr. PVS Jagan ji, who took out valuable time from their busy schedule and enlightened the members. We have deep sense of appreciation for your knowledge and deliberation on the subject, sir. I would also like to extend a special thanks to CA Bharat Thakkar ji, CFO Kotak Mahindra Prime Limited. Also, I would like to appreciate the efforts of CA Charanjot Singh Nandaji, Chairman Committee on Management Accounting, and CA Nand Kishore ji, Vice Chairman of CMA Committee. Sir, thank you for giving us the opportunity to host this wonderful program. Looking forward to many more such programs. Keep care and thank you.
Thanks a lot, Nakul bhai. Heartiest thanks
you.
to all
Thank
the
you to
worthy
everyone
speakers.
from Committee on Management. Thank you to everyone.
Thanks a lot, all the participants.
Thank
Stay
you to
tuned with
Jagmohan
Committee
sir,
on.
Shekijar sir, Thakkar sir, Vinay Jamwal sir, Nakul sir, Dheeraj Sharma ji, Nanda ji, and all other associated with this program. Thank you very much to everyone and all the respected members also for joining this program in a great number.
Thank you from
Thank
our
you, thank
side
you,
for
Ashwin.
allowing us, of giving us this opportunity to present here. Thank you very
Thank
much.
you, sir. Thank you, sir. Thank you.
Yeah, thanks a lot. And I request members kindly stay tuned with Committee on Management Accounting for more such insightful sessions in the future as well. Thank you. Good night.
Thank you. Good night. Good night. Good night.